Things can really change in a hurry on Wall Street. Just a few days ago, we were thinking, hey, the low of the move is in, back up to old time highs. Pretty good earnings reports. Kaplooey. We have some major stocks trading in the red, except for Amazon. We'll talk about that. Always want to talk about the good report. Pot stocks hot. Will that continue? Tommy Lackey, 835. He's been good. He's been spot on. Let's get this Wednesday started. It's pre-market prep.
Welcome to Benzinga's Pre-Market Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right, you don't like the close on the lows of the session? That's what we did. We're down 21 and 3/4 handles at 50.45. The buck still above 106, 106 up 19, up about a dime. TLT trying to find a bid here at the $88 level. Crude down a $1.58 at 80.34. Gold, not down, but not up much. Up $3, 23.0590. Silver up 9 cents at 26.74. And another bad day for Bitcoin. We're losing that 60K level. We're down $1,315 at 58,085. Triple D, you have some busy after hours and you have some super busy after hours.
Was not a sleeper, we'll say that. There was a lot of crazy moves, and it was the night of violent moves. That's what I will say is, you had stocks going in both directions and violently, and then some just whipsawing around and chopping around. I said, it's kind of like the fade everything market, and it really felt like, you were at SMCI was trading up originally, then they just hammer it, and we're going to get into all those actions. Let's bring in AB here. What's going on? Let's bring in AB. What's up?
How we doing, y'all?
We are getting ready for another crazy trading day. Obviously some weakness here, but how's your night? What's going on?
It was good. I mean, my portfolio got crushed yesterday with everyone, but I'm feeling a little bit vindicated this morning, and I'll tell you guys why. So I'm sure some of y'all noticed I wasn't on the show last Friday or yesterday or on Monday. And Friday, so, we do the show pretty early. I wake up at like 8:40, 45 minutes after the show started. My alarm on my phone was going off, but no sound. Like it said alarm on my iPhone, but no sound was going out. And I was like, all right, that's weird. Like, what the heck? And, Luke, Zundaid asked me what happened. I told them, like, I don't like to make excuses. And that's what it sounded like a big, old, fat excuse. Like my alarm wasn't going off. I told one of my other buddies over the weekend, and he was like, sure. And it was a bad look too, because I was out the night before, but I was drinking responsibly. had 2 or 3 beers. Told my friends at like 1 they were going to another bar. I was like, no, I got to go home. I got this show in the morning. Well, I wake up today, and Zundaid sent me this on Slack, a TechCrunch article. Ring the alarm bells. The iPhone alarm isn't working. The Today Show did a whole report on it of people sharing on social media. Hold on, if your alarm hasn't gone off recently, you're not alone. Apple says it's aware of this issue. And I didn't even mention this to Joel because, like I said, I don't like to make excuses, but at least I know I'm not crazy. And it's good to know that I'm not crazy.
It was Apple's fault that AB wasn't here on Friday.
I mean, someone probably like got in a lot more trouble or repercussions, missed something, had like a court case or something they had to be at. And this is a big deal. People need to wake up on time.
Yeah, and AB got in trouble here too. This wasn't fair. It wasn't his fault. The alarm didn't go off.
We need to buy puts on Apple based on the alarm.
I think so. We're blaming Apple for this.
There's going to be lawsuits. There's going to be lawsuits. You know how much emotional.
AB's going in the class action suit here. I missed that Friday morning show, and Joel and Dennis gave me crap.
Yeah, it was like the Seinfeld episode where the marathon runner didn't wake up in time for the race. But all right, I just thought that was hilarious. Funny. And again, I woke up this morning being like, oh my God, like at least I know I'm not going crazy, because I always if my alarm goes off, it doesn't matter how much sleep I'm getting, what I was doing the night before, like I will get up. So I just didn't know what was going on. But all right, let's get back to
that should okay. I mean, when you miss a day of school, right, you got to bring a note in to the teacher, right? And But we're all squared away here. But you were smiling this morning on the pre-market show, and I'm like, he's got something up his sleeve there. But and
Unless I paid off this TechCrunch writer to write it
It
today's
was
show.
going up. It wasn't making any sounds.
No.
Wow.
oh boy. Okay, let's go to SMCI, man. I
Yeah.
feel good about this one. I feel good about the way I talked about this one
This was
on
going to
the
be the
closing
driver
print.
for the market. I said it yesterday, and you know what? It is. Amazon's up, so we can see who's winning the driving battle, and it is SMCI. So AB, give us those numbers, which are actually okay.
Yeah, so SMCI Q3 EPS $6.65, beat the $5.78 estimate. Sales came in at 3.85 billion, missed the 3.95 billion. So beat on EPS, missed on EPS, beat. Wait, hold on, sorry.
They did revenue.
On sales, beat on EPS. Sorry, my Benzinga Pro is being a little wonky there. But the guidance was a little bit, I think lighter than what the market was expecting, because they said revenue from 14.7 billion to 15.1 billion. The estimates were for 14.6. So yeah, I mean, I guess the numbers were okay on the line, but the expectations were very high for SMCI going into this report.
Yeah. And actually, when you miss on revenue, you can't miss on revenue when you've been running and you're up, whatever it is this year, just a ridiculous amount. People keep asking you to rebuy your SMCI. I sold my last stock at $930. Yeah, at a certain point in time, I'd be, interested in rebuying it. One thing we got to consider, the pull forward, Nvidia is obviously going to have their report later in the earnings season. I don't know if you have to just run in and buy this dip immediately that, it's going to bounce right back. I don't think it's going to bounce right back, but I mean, SMCI is a wild child. When you think it can't do something, then it just, boom, it does it. It sell off 200 points. Week later, got the 200-point loss back. So this is a stock that does always have the potential to bounce back. I just feel like with the revenue miss and people arguing the pull forward, and let's see, we could even revisit the low of the move, which is 671. So let's, that's kind of a more better spot to strike here probably, but I'm interested. It's still on my shopping list right now at a forward PE. If we're just taking the current earnings estimates, it's trading 27 times. So it is not an expensive stock by any means if they continue to have these earnings. Now, again, if there's pull forward and those earnings you could actually see go down, then it's a different story here. So lots of arguments from the Bears, lots of arguments from the Bulls. I'm on the sidelines for now.
Wow. This one, I just looked at the chart. You and David were talking about it yesterday, and man, that 950 area just stuck out to me. I mean, you've been making lower highs off the move. You didn't quite get there yet. I can't believe we're $200 below that pre-market high at 947.75. So that was a whopper here. Bad data report, right? Not a good data report on any stretch of the imagination after the way the market got hit.
Yeah.
You're starting to settle in here a little bit. I'll give you the pre-market low. I like what Dennis says here. Sit and wait. 720.10 is the pre-market low. Look like buyers have already situated themselves just under 740. Those are minus support levels. So we'll see. We'll see if we can just catch a bid. Let it rest a day or two. As good a feel as I had for it yesterday. Now down $107. A little bit tough. If you have a short on, and you saw her say go to 940 and you were throwing up in your mouth, and now it's at 750, you may want to reevaluate where your target was on that. But SMCI traded down $105, but still way off the low of the move.
Yeah.
Also, remember, we got Fed speak here today, Fed decision Wednesday. So that can, be game changing here as well. So just be aware of that. There's going to be, that's going to dictate really the next market move. I mean, it's probably market factors at this point in time, even on a stock like SMCI, where, we were coming back. I mean, just even take the recent action. We'll just do quick technical on the SPY, just to put it in perspective, of 525 down to 495. That's a 30-point sell-off on SPY. You had the 15-point rally to 510. I mean, you're 50% retraced it on the tick, and then you just failed there. So right now, I would say bears are in control overall here, which makes me a little bit more conservative on just randomly buying the first dip I see.
And when this stock first started running, I mean, that one week or 2 weeks where it went from, what was it, like 200 to 1,000 or whatever, it felt,
Yeah,
almost
that was possible anyway.
AMC, GameStop-esque, and at the time we were talking about it and saying, well, it's not, the move is crazy, but it's not the exact same because you have some fundamentals backing it up.
Mhm.
Talking about SMCI. And just looking at the quarter over quarter revenue growth, like in Benzinga Pro, they went from 1.8 billion in the 3 months ending in at the end of 2022 to now 3.7 billion.
Crazy.
To now, in this last quarter was what I say earlier, 5.1 billion. So going from, I mean, like less than 2 billion 8 quarters ago to more than 5 billion. Now you have the growth here, but it's just, I mean, it might be a little bit too much too fast. The title of today's show is AI Bubble Burst. Let's go to AMD next, because it's the
Yep.
same, kind of similar story in a
Sure.
chip stock in the AI space. AMD reported and actually beat on, let me get those numbers pulled up. I know beat on, was it a double beat? We had AMD come in at revenue came in at 5.4 or sorry, this is guidance for Q2, 5.4 to 6 billion versus 5.7 billion. So the guidance is kind of in line. EPS came in at 62 cents, beat the 61-cent estimate. Sales came in at 5.47 billion, beat the 5.45 billion. So double beat across the board, but by a very slight amount, and the stock started trading down 7%. So again, expectations for all these stocks were very high.
Yeah, that's just it. And it's the bar. And, NVIDIA has maybe set unrealistic expectations for all of these companies here. I mean, AMD is not NVIDIA. Do I think it could be the number 2 player in the industry? I do. It's not NVIDIA at this point in time, though. So NVIDIA has obviously really blown numbers away. And when you see these companies just beating, or even in SMCI's case for revenue missing, they're going to hit the stocks. So it's not surprising that AMD is down here too. I do have the position in AMD. I had sold some stock, I rebought it. I'm still in this. It's a long-term position. It's not my trading account. It's not on for a swing trade. It's in my long-term portfolio. And I'm still up in it significantly because this is a stock that I was bought at $90, 94, I think. Went to 220, obviously, went crazy. I'd sold part of it, and then I rebought the piece that I sold. So, my average cost base is probably really less. It brings it up when you sell and then you buy. But, my original buy was 95, and then I had bought, I'd sold at 180, and then I rebought the stock that I sold at 160. So I'm still kind of in from the original position, and that's what I've got.
I think it's important. It's the beginning of the month, right? And monthly candles are important. We can talk about the dailies and the weeklies all we want, but for 2 stocks here, AMD and SMCI, definitely quite a distance from that monthly close where a lot of people got their mark on their sheets here. I want to see it come down to 140. And the reason I say that is you had a low in the $54 area back in October, got over 220 here, pull it back. If it takes some time to come in here, and I don't know if there's any gaps to fill, but just come into this 138, 140 area, settle in. I think I'd be a little bit more prone to try a long position in this one. Just looking on the retracement, we are off the pre-market low. Pre-market low comes in at 143.90, so I think you'll thicken up ahead of that. High beta stock. So obviously, what happens with the Fed today will influence. But starting out in the hole, and if you want to look at this just for a monthly perspective, I mean that monthly close, 158.36. I'd have to call that 4-star resistance here in the interim till something changes. Down $10. AMD.
Yeah, and I think it was our guest yesterday, David Prince, who said that, do you think there's enough money to be made in number 2? And if this AI thing ends up being half as big as a lot of people in the market thinks it will, then I do think there will be a lot of money to be made for number 2. I do think, Dennis, to your point, that no one's touching NVIDIA, no one's catching up with NVIDIA, but again, number 2 could still make some money. So I like AMD in the long run. Let's stay in the big tech world and go to Amazon. Amazon reported last night and really gave up a lot of the gains after the report. Because the numbers were pretty strong. I mean, I don't think it was surprising for anyone to see Amazon, report a huge quarter. So EPS came in at 98 cents, beat the 82 cents estimate, so beat by 16 cents there. Sales came in at $143.3 billion, beat the $142.5 billion. Amazon AWS growth rate now at $100 billion annual revenue run rate. So just another like huge quarter of them saying, you know, our cloud growth, AWS is insanely big and continuing to grow. Some revenue guidance was a little bit disappointing, but the stock jumped up a lot on the news or a lot on the report, and then started to come down a little bit.
And the sales guidance a little bit like Q2 net sales 144 billion to 149 billion. Analyst estimates were up at 150 billion. So that may be why, you know, it was good. You know, cloud was fine, everything was fine. If you want to find the hole in the earnings, maybe there. It popped, it actually popped, dropped, and then popped, and then it came back down. So volatile action in Amazon. Still long in the long-term portfolio from about 105, holding on to that maybe for life. PE is 41 on the forward basis, so it's not cheap by any means, but Amazon has never been cheap. I mean, you know, Amazon's probably from a PE perspective, it's probably, you know, it's fairly cheap as it's ever been, really, probably. You know, I'm sure it's maybe, you know, when it's down on 105, maybe got down to the 30s of PE, but it's always been an expensive stock. So we know it's always grown into that multiple. I still think Amazon, one of the best companies in the world. Just for example, ordered some stuff from Walmart.ca. I don't order online. My wife's the master of it, but I went to Walmart in Canada, and I ordered something. I didn't even notice it says it'll be there the Wednesday. I was like, okay, well, that's tomorrow. That'll be fine. And then I looked, and I'm like, Wednesday the 15th, 2 weeks. I was like, what the hell's going on? So then I went to Amazon Prime, ordered the same thing, cancel the order at Walmart, Amazon Prime, there tomorrow. I'm like, that's just ridiculous. And maybe it was, you know, the product, but I ordered the same product on Amazon. It was a day. So, I mean, I just assumed, I never even thought about, like, you're just automatically looking, oh, it'll be there Wednesday. Well, it's Tuesday. Okay, that's tomorrow. It never even crossed my mind that it'd be 2 weeks to deliver. Just shows you how crappy, you know, all the other online. And again, it's not everyone, but I mean, if Walmart's trying to compete with Amazon, you can't take 2 weeks to deliver a product I just bought online. You know, I don't even know if I'm going to need it in 2 weeks. So Amazon, just unbelievable with everything they do. I stay long.
Let's throw out the high and we'll throw out the low. I don't know what inspired someone to knock this down to 165.32 and then take it up to 186.43. That is, I bet you if I even crack that down, that's probably like a 5-minute bar there. Yeah, a little over 5 minutes. Unbelievable price action, but we're going to throw out the high. We're going to throw out the low. We're going to focus on that daily candle from yesterday and the close at 175. That's a good level. That will protect it from falling into the gap. So I use that as, you know, pretty good support. If it goes red, then you can look for yesterday's low was right in that area too. And then we just been kind of consolidating. Very important to take out that high from yesterday at 182.99, but doesn't, you know, unless you get a rip roaring rally, doesn't feel like that's going to be taking place either. So settling in up 253 and pretty impressive too on a, you know, as bad a day as we had in the market yesterday. I know the after hours were crazy. We continued to sell off. So Amazon, the bright spot in the market today, traded into green on pretty good pre-market volume.
We're missing numbers again. ADP came out 815,
Oh,
192,000 versus 179,000. So a little bit hot. Not too bad though. So, you know, again, you know, 184,000 was prior month. So it's kind of in there. It wasn't really a market mover here. I didn't really notice the S&Ps move at all, to be honest with you.
How about the Treasury refunding announcement at 8:30, Dennis?
It's going to move the market. That's what happens. Everything moves the markets here, Joel. You got to know all these 8:30 numbers here.
Man,
they all matter apparently now.
Yeah,
economic calendar driving the bus.
I think yesterday we were all a little bit surprised to see how much the market moved off of, you know, that employment cost number. But then as the day went on, I mean, everything just sold off. The overall market, S&P closed down 1.6%. I don't think you can look at that and say it was all from that number. That was kind of the catalyst and the trigger, but it seemed like the market was ready for a pullback anyway, and it was going to latch on to any, you know, reason it had. But Tesla yesterday was one of your big losers of the day, closing down more than 5% after having a great day Monday, closing up like 15%.
Yeah.
And, saw some people in the chat talking about it. We're going to take a break from earnings for a second and talk some Tesla. Dennis, let's talk about, the full self-driving. I saw you tweeting about it. You said that Tesla is now, did you say it's your biggest position in your long portfolio?
No, but it's now over a full-size position, one of the bigger ones for sure. And this is the 4th time I've bought Tesla. So I've been buying this. I bought too early. I'd bought around 200. I'd bought around 175, and then I got spooked and sold a bunch at 175. So I basically netted that out. Then I bought again at 165. That was actually after the pop.
The earnings,
and then
yeah.
I bought again yesterday at 185. So my average is right in here, 180, 185, right in here. So I'm kind of where I'm at with that. Reason, and people say you're nuts, you're paying 55 times earnings for a company that's growth is decelerating massively. And those are all true facts, folks. I mean, the core business is under attack here. Not going to, wash that and say, those numbers were awesome. These numbers were not awesome. But what I've said, those stocks start rallying on bad numbers, you got to be somewhat cautious. I think this story here carries the stock, though, in the second half. And I may be early, and maybe it fills the gap. And Joel, I know you were thinking about this gap fill, and maybe you're right. Maybe you should wait down to 172, where you get the gap fill to get the perfect price. It might fall another $8 here, but it's not a trade, not in the trading account, not in the swing trading account, long-term RSP, which is my retirement account. It's, a company that I really believe in. I still believe in Musk. I believe in the story here. 3 stories here going to carry it in the next few years. Full self-drive is coming, folks. It's coming. That's, maybe not to Musk's timeline, but it's coming. Robo-taxis are obviously going to be a big part. That's going to be a huge fight. Like, I would not want to own Uber or Lyft for those reasons. I think you're going to get attacked on the full self-drive. And then, obviously, humanoids, we've talked about that before. But, just show that video, Aaron. I don't know if we've showed this on the show. This from my friend Rahid out in San Francisco. I mean, Waymo, people are saying full self-drive, somebody's arguing today is 30 years away. I'm like, it's not 30 years away. It's actually here in some cities here right now. Please show this video here. If we can zoom in. This from my friend Rahid in San Francisco. This is Waymo. This is currently operational. They've been running for about... You were saying 6 months. I'm not sure how long it is, AB. They're in 4 cities here now. There's no driver in this taxi. It comes and it picks you up and it drives you to your destination. Again, they're saying there's pockets, where it's, the mapping is already there. Following that, it's more difficult to do broad scale. Get into colder climates where there's snow and other issues. All those issues have to be considered. But I think those issues do get solved. And I think full self-drive is a lot closer than a lot of people want to believe. And in San Francisco, it's already here.
Yeah, you have, I know San Francisco and Phoenix are 2 of the big cities that are trying this. And you have Cruise and Waymo both operating driverless taxis in these cities. When I was looking at the numbers, I was actually looking into this like last week. It wasn't a huge amount of volume. They each do maybe like a few hundred rides a day or something in those cities. But I mean, the tech is here. There's no doubt about that. And I drive a Toyota. I've talked about this on the show too, that I even have in my Toyota 2021 Corolla. Like, it's not, it's now 3 years old and not like the highest line car ever. When I'm on the highway, I have an option to just let it, drive itself in the lane, and it'll, do cruise control and radar the car in front of it. So it'll slow down when the car's in front of me slowing down. It'll stay in the lane, but I have to like touch the steering wheel every 15 seconds. It's really only good for road trips. But my hunch is that Toyota really has the technology, like further along than that. They're kind of just putting it out in bits and pieces. Like, they don't want to, Toyota doesn't want to be the first one with full self-driving. Tesla does. So Tesla is like on the clock to put this out now in the next 2-3 years. The question will become like, are people ready for it? Are people ready to adopt it? Are cities ready to adopt it? Are the governments ready to, let this go without, regulation? So I think with all that said, the technology may be here sooner than we see the full adoption.
The technology is here
now.
Dennis,
I got to interrupt you here. I mean, when you put that tweet out, number one, I looked at it like technically, and I'm just like, I just think it's an absolute no man's land. It
Sure.
wasn't a big chase because it went to 200 and it pulled back to
I buy dips.
185. Yep. So you did
15
buy the
point dip.
dip. I This just kind of feels like, that the Elon Musk Kool-Aid. Things were quiet. They had a bad earnings
Yep.
report, surprise trip to China that's
Yep.
not fully approved yet. This is not investment advice, but man, it just seems like, man, this thing's in no man's land. I could easily see it coming down and filling that 170 gap. There's another thing after that. I think another thing is going to be market dependent.
Yeah.
But I just think it's like kind of like the Kool-Aid trade. And he put everything out there. You got the pop to 200, and now you're coming back down to fill the gap. So you managed it pretty well so far for a loser. So that's what you're good at. I just overall with the market too. The other reason I said is because of the way the market, the market was acting yesterday. But I think you're going to see lower levels in this thing, maybe 170 before you get back up. We're at 180 before that 190, 200. But I know you're looking at it long term. I'm
Yeah.
on the self-driving thing. I doubted it for a long time. It moves. It just moves so slow. I don't know if the infrastructure is there to do it. People talk about detours and everything, and San Francisco is a difficult terrain, right? The hills and the curves and
A
everything.
lot
So
of
for
people.
doing, yeah, and a lot
They're
of
finding a
people.
way out
Yeah.
there. I think we're very close to it. I mean, we're here. It's here in San Francisco. You can argue
Hmm.
that, okay, well, you can't, just take that and put that anywhere. It's all mapped, the way it's very, obviously, that's stuck in its little city here right now. But I think it's going to expand quickly here. I'm with you technically here. I'm probably early on the trade. One
Hmm.
thing I've done though over my years is when I mix trading and investing, and you're trying to get the best possible price, like you told me on the JP Morgan, you're trying to get that best possible price. You're going to
You
get it
miss it.
$2 cheaper. Sometimes you miss it. This is a story, if you've been listening to the show, I've been talking about for the last 6 months. I've been talking about humanoids, robo-taxis. We've been talking about all this stuff. I think it's going to be a driver. I may be early. I think I'm going to be right, though. I think 5 years from now, I think this company is one of the most valuable companies in the world. So it's a long-term bet. Don't follow me in for a trade and say it. And you know what? This is the one downside to doing a show and having a big
I know.
following and stuff is, I was a lot better investor before I actually started doing the show because, I like to talk, people, want to know what you're investing in and you're trying to talk and I try to give. If I'm going to go invest in something, I talk about it. Now everybody knows you're in it. And when it goes down, people are like, are you selling? What are you doing? What are you doing? I did a lot better in my investment portfolio when I just bought stocks and didn't look at them. That's how I got 2,000% MasterCard and 500% in Apple and 1,000% in Google. Was just not looking at it. But now I look at it all the time. We're trading it, and and everybody else is like talking about my position because like trading wise, I don't talk my positions much trading, but from an investing standpoint, I talk them all the time because if I've got a good idea, I want to share it as well. It's difficult when you're looking at it all the time. You're always trying to get the best possible price, and I see what you're talking about. Part of me wants to say, okay, I should resell it. Basically scratch the trade out here at 181. And rebuy it at 172 when it fills that gap, and I save myself $10. And you know what? I'll probably get it. But what if I don't?
Good to
And then
pop.
all of
Watch
a sudden
out. Watch
tips
your
off.
offers, Triple D. We just got a little pop here off the number that we didn't really think should move the market, but that was quickly faded here. Do we have that 830 number, the Treasury refunding? Just a quick pop. Maybe should have left those offers out there. Sorry about that, Dennis. But
get out,
but you know what?
get out, get in. Yeah.
I don't know. It's a I don't know trade. Like if you would
Yeah.
have called me up and said, I want to do this, I would have said,
Don't do it.
maybe wait a couple days. But you know
Maybe.
what? I told you to wait on, I tried to get you a little bit cheaper in the Kentucky.
Joel, I think you might be right. I think I might be
Yeah.
early, and I believe that you assessed very well the Elon Musk Kool-Aid. We even talked about this a couple days ago. This is what he does. We have bad numbers. He talks up his stock. The question is, can he meet the talk? The difference for me was when Rahit sent me that video of Waymo watching that operational and saying it's really cool, man. And I'm like, wow, that is so cool. Just imagine, the robotaxi just coming to your house and picking you up. That's coming, folks. It's already here in California. It's already here in San Francisco. So I just think that Tesla's going to be a big part of that. Maybe I'm wrong. Maybe it's going to be Toyota. Maybe it's going to be everybody else. Maybe it's going to be Uber. Maybe it's going to be. But full self-drive is coming. It's not stopping. It's not 30 years away, folks. It's here right now in certain cities.
Well, you have way more.
Uber, you also looked at this as perhaps bad for Uber and Lyft, right?
I think very bad for Lyft because they don't even have the eats portion of it. At least Uber Eats has, well, you got a driver, they're going to go pick up the food. You're going to have must have this humanoid driver go in there to go pick up the food. I'm sure they can solve that problem here too. I think it's really bad for Uber and Lyft because how do you compete when you don't even have to pay drivers now? How are they going to have to drop prices more? So I think, as full self-drive comes, I think Uber and Lyft are screaming sells. And the stocks are starting to come down here now. I think as we get further in full self-drive, I think Uber and Lyft, it's going to eat their lunch significantly here. Scared of both of those stocks. I would be selling bounces in Uber and Lyft. Just my opinion. I may be wrong. A lot of my stuff I do, that's the difference between me and you, Joel, is you're a technical analyst. You follow the numbers. You sit at the charts and live and die by them. We know if you've listened to my show for a while, I respect charts, but it's not my go-to thing. I've never been a huge technical analyst. I've never been a big believer that, we got the monthlies coming out, so we've got to really look at those monthly candles. Nah, I look at the 90-day, it gives me an idea if the stock's been strong or weak. That's about it. And then I go with story. Like when I bought NVIDIA back at 400, the stock looked like shit. It really did. It's sitting down here, breaking down through the lows. But you know what I said to myself? The story is going to carry this because this AI story is for real. And, and that ended up being one of my best trades, NVIDIA. So SMCI wasn't like one that I'm like, it's got the breakout. I bought it before the breakout. I was in it for a long time saying the story is going to carry. I was in SMCI for 5 months before it started moving, way early on it. But you know what? If you're not on margin and you're not with calls and you're not with options, you have that luxury of being able to wait. When you're invested just with your money, you can wait. And you know what? If the Tesla thing falls apart in the next 6 months, But again, I'm thinking 5 years from now, I don't really see a path and there's paths to lose, but I think Tesla and Musk will figure out a lot of this stuff 3 to 5 years from now. So one, know your time horizon, and two, know why you're in the stock. Not in it for a trade, and maybe you don't let a trade become an investment, but you can let an investment become an investment. And you know what? That SMCI, when I bought that, folks, I bought it at 270. That thing went to 220. And you know what? You guys knew I was in it, and people are giving me heat down there and saying this is a piece of crap. Well, it ended up being, I ended up making like 300% on it. So sometimes you take a little bit of heat, but, long run, I think I'm going to be good with the Tesla. I don't want to miss it. And you know what? I think you're right. I think I might get a 172, and folks, maybe you wait for 172. But I still think full self-drives coming, robo-taxis and humanoids. I think there's going to be a story here.
All right, 834, that pop was a little bit short-lived, but you seem to be catching a little bit of a bid here. We are trimming some of the losses here in the market. Also, it's a Fed day, too. I mean, we could talk about that with Tommy or after the break. But here we are, 834. Let's bring in Tommy Lackey.
Let's go ahead. Let's bring on Tommy Lackey from Relativity Capital. Without further ado, let's give Tommy our special pre-market prep. Welcome.
All right. Good morning, Tommy. Standing up straight and tall there.
Yeah.
Attack the markets. It's always great to have you. It's been a while, but we feel that you've been pretty consistent in the market so far this year. And I think we're at an important turning point. Let's just go real big. Let's go macro. Let's go QQQs, S&Ps, IWM, whatever your preferred index is.
All right. Good morning, guys. Hope everybody's doing well. Glad to be here, and I appreciate y'all having me back. First thing I'm gonna have to ask, is that open window there right behind me annoying as can be? Because it looks really bright right there.
You're good. We can see you. Okay. Yeah, I know you're good. Where are you right now? It looks like you're looking down, like you're really high right now, wherever you are.
Well, no, I have a standing desk situation, all that, and the camera's on the back of one of my monitors, so I'll have to look down a little bit for my monitor and stuff. But I moved into a new office. I basically have a cabin on the lake that I decided to spend the summer in for a while. So that's kind of where I am these days, and really enjoying the nature side of things. So, but yeah, markets. Let's talk about markets and kind of where we are and overall. And I think a lot of what y'all said made just tons of sense. And Dennis, I'm going to have to jump on your bandwagon real quick before I go there and say, I certainly understand once you make ideas and things like that public, it makes it really hard to change your mind, but we still have to. One of the hardest things about being an RIA for clients is that, of course, you want to do well for people. Of course, you want to do people right, but there are a lot of questions from maybe they don't exactly know all the angles you're looking at, but they ask the questions anyway, and that can affect you. So it just takes a really strong person, and I commend you for keeping and doing it.
I get influenced by everyone all the time, so I'm very influenced. It's sometimes hard to separate, your initial ideas, and sometimes you're influenced for good. Sometimes I'm in some really bad ideas, and the people talk me, and that's why I like to listen to other opinions. And we value people like you, Tommy, coming on. Like the first thing Tommy, like last year was saying, when I was full on 2023, thought we were going to a serious recession. Tommy's like, it could be in the second half. This could get pushed along, and he gave lots of good reasons. And that actually talked me off the bare ledge there, and probably saved me a lot of money because it kept me invested in some stuff, Tommy. So, we get great opinions from a lot of people, especially people like you coming on the show for a long time. But yeah, let's bring it into market talk here right now. Like maybe we should just start with the overall market. We can go into the Amazons and the Teslas, the individual stories, but it's really a market-driven, overall market here right now is really where the market's happening. So
absolutely. I think where we're at is we're in the middle of a very normal correction. At this point, it's very shallow. We're still within a 23.8% when you look at some different types of measurements and things like that on most of them. Yeah, the IWM's pulled back a little bit more, and that is concerning. But even with the IWM pulling back more, we are still seeing basic broadening out. Again, that doesn't mean breadth doesn't come back some in the correction, but it's still broadening out into different spaces. We've seen obviously tremendous moves into commodities here in the last few months. And, everybody says, oh, we move into commodities, we're done. Again, when the money moved into the markets back in November, whatever you want to call it, through the end of the year, the thrusts that were there, the level of volume, the velocity. Remember, I play a lot on discussing velocity because I think it's important. That's where institutions can really drive things. None of that, institutions don't come into a market for 3 to 6 months. They don't when they come in with that kind of force. We talked about this when I was here in January. So we're now seeing, we thought then a correction would come earlier. It really didn't. It started wobbling around a little bit in March in the middle, and then it actually finally hit the vertical part coming down sometime in late April. And so really you started seeing things move sideways and breadth in the other, not dying. It just wasn't going up as fast. And again, you have to understand that that is part of markets. And if you look at different charts and all that, you'll see it that, yeah, there were some up and downs and some new highs within it, but it really has been sideways since early to mid-March from a broader market perspective. So with that in case, this correction can continue to go, but we have to realize it actually started early to mid-March. So we're in 5-6 weeks, something like that. If we look at a time study situation, we had about a 5 to 6 month rise. Typically, your pullback or correction or consolidation is up to roughly half that time. So this could go for 2.5 months, and we're a month and a week in it.
Yeah. So Tommy, I see you got some chart. I'm going to go ahead and pop up your charts real quick. I see that you're sharing them and let us know what we're looking at here, because this is too many lines for me. I don't know what's going on here, but I'm sure you can walk us through it.
Again, that's one thing a lot of people say about my system is that, again, there's a lot of different stuff and things like that. It does have a little bit of a learning curve, but it's a real simple flow once you get it. This is my RSI system that I got from Andrew Cardwell before he passed away. He really was the master with RSI. I studied with him for about 10 years. He was a great friend. But in these are some of the different things that he saw to use RSI more as a trend following, which I always talk with y'all about, as opposed to an overbought, oversold. But that's not really my overall point in this scenario. Really, it's kind of coming down maybe to the next chart, which is my breadth chart. And it's my equal weight universe, which is the pricing part. But this is the breadth of 3,000 stocks going all the way down to, I think it's $100 million. So it's got a lot of small ones in here too. So of course, it's not going to keep up with the S&P right now. But as long as we know the context of the whole market, it still all makes sense. The breadth has fallen off, but we've not fallen into a true oversold, into a true bear type situation. This is still corrective. Now, the idea that technology is correcting the most and getting people a little worried, well, that makes sense because it went up the most. But the idea where we're rotating that money instead of out of the markets, I've told you guys for almost a decade now, the big key here is as long as the money rotates within the markets and within sectors as opposed to out totally, then that's what runs the markets. It doesn't have to be the hot sector all the time. It just has to mean when it sells and takes profits, it doesn't actually leave equities. And it did not leave equities. It moved to commodities. Now, we're up to, I'm up to probably almost 22 or 23% of my clients' portfolios are in commodities. And if you look at the S&P weightings, that might be 4%. So I'm way overweight there. Not
commodities.
Right. But that's just where the basic rotations go on. Do I still have a decent amount of tech? Of course I do, because that's where a lot of the earnings still are. They just got a little overheated. I've said this for years. Technology runs faster than everything, but that's where a very large percent of our earnings come from. No matter how you deal it, we just have to figure out if we can find a good spot like Dennis is talking about. If you want to buy these long-term stories, if you want to buy them in the short term, then obviously the technicals do become much more valuable. And I would say, Dennis, those are your longer term buys and things like that. I think you're much more acute to the chart and to the market flow when you're dealing with your day trading account.
Yeah. Oh, for sure. You know, in the day trading account, you're looking at this stuff a lot more.
Yeah, it doesn't have to be charts, but it is data. You know,
all data. I'm a news trader, news-driven trader.
Exactly.
What's the story of the day?
Really what it comes down to is, what are you reacting to? And right now, if you are that longer term person, this is not something where you are throwing everything out, the baby out with the bathwater, because we don't have those signals yet. If we look short term on the daily, and you can see it if I pull that chart back up to the top, you can see it even in this chart, even though it's equal weight. Basically, we're coming off on this correction. We're in the middle of a bounce, which I always say the bounce is where we get all our information. And until yesterday, the bounce was handling itself pretty well. And yesterday we saw it get sold back down. And now this is looking like a classic bear flag. But it's a classic bear flag that has not broken yet. So right now, everything is still rhetoric. I do believe simple patterns like this, Dennis, have a lot of psychology in them that can play out in the markets. And that's why people like me do watch technical analysis. But also patterns can morph very easily. And if you think it's an exact science, you're going to get chopped up and spit out real quick. And so this looks like a bear flag. If it plays down and breaks below this, we have our follow through, which means we're very likely to come on down to this next level where you see this consolidation right here. I mean, it's just go straight across to where my arrow is, right down there where it came down before. And then we can go all the way down to the lows of us, which brings us to the highs of this previous area right back over here. I know my cursor's not real big, but all this is going back and checking back on a previous large breakout point.
Tommy, I mean, if this pullback does continue, you know, I imagine start to see sentiment change a lot, especially when it comes to retail investors. I mean, even a few weeks ago when we were near all-time highs, it felt like the market didn't really have a lot of the euphoria behind it that typically comes with all-time highs. Is that something you look at all, like investor sentiment? I mean, you talk to other people that manage money, because I mean, I'm always of the thought process that, like, you know, once the majority of people are bearish, I'm like, okay, well, now I'm going to start buying stocks again. Because now, you know, and it's like, typically, you know, it doesn't always work out well, but typically, you know, when people are real scared, you know, that's usually a buying opportunity.
You nailed it, Aaron. I mean, that's exactly what it is. This is that perfect situation in this whole market. And I've discussed it. And I think the guys over at Adaptive have discussed it, Ian, and those guys as well, as this is the 1 foot out the door market. And we've had that before when I've talked to y'all a few times, and those markets do not tend to be major tops. They do not. And in the breadth thing, we're not getting major tops here in the breadth scenario. It's like literally every time we try to make a little bit of headway, or even when we do, and one set of bad news comes out, the sell days we have, if you look at them, are all big. They're not, it's not a grinding down. It's that I'm tired of this. I just can't deal with it. It's, oh God, I'm scared. What do I need to do right now? Because I don't want to get behind. And I write a weekly market review for Power Investing, which is what this website is we're looking at that I built. I write a weekly market review, and I discussed that just this week, is that basically the question is, and the 1 foot out the door market is a continuous flip-flop from fear to FOMO. And it basically goes back and forth as the markets chop people up. And it's that scenario to where when people are so scared that they're like, I don't want to be here when it does crack, because everybody's telling me it's going to crack. But oh my gosh, it keeps turning around and eating up these big red candles within a week. I don't want to miss that either.
Yeah,
when you look at the breadth,
such a good point.
The breadth is not bad enough to be saying that we're in a deterioration. If you look at these top ones, and I know this is kind of small for you guys, but these top 3 are my longer term. The top is the the new high, new low differential, where it takes new highs minus new lows. This did get a signal of that red moving average, but this is one where you have to have all 3 of these below zero before you have a long-term downturn. The next one's the advanced decline line. Has it come off with the correction? Sure. Has it failed? No. And then the final one above that is the print above the 200-day, the percentage of my stocks that are above the 200-day moving average. Again, is it up at 80? No, but look how rarely it gets over 80. But it's still hanging up in the 60% range. That is not a bear market when 60% are above the 200-day moving average. And so these are the parts that everybody likes to say on the first fluctuation, oh goodness, the McClellan oscillator is below zero. Of course it is. We sold off some. We can't keep that kind of breadth momentum forever, but it doesn't mean the markets are finished. It means we have to have digestion in order to reset up charts.
Tommy, let me. I'm going to pull up my chart here, and I'm looking at the SPY here, and one pattern I like to look at it is double tops and triple tops, double bottoms, triple bottoms, and whatnot. And we had this tremendous COVID run, right, from March of 20 up until the end of 22. We basically put a double top into monthlies, and then we had a really bad 2022. I'm looking at this chart after 1, 2, 3, 4, 5 months of pretty good gains. Double top here on the S&P monthly chart here, starting in the hole to start the month again. So we're already starting on another red candle. Not calling for like an end of the bull market here, but where are you looking for? Like you're talking about a healthy retracement. Where does a healthy retracement turn into a change in trend?
All right, let me see if I can pull up one of mine. You can flip it back to me here in a second. We'll look at the SPY daily. Basically, if we look at here and the way I run charts and my charts, and I do look at things like cloud and things like that on daily, monthly, all that. But again, with this daily chart on mine that I have up, if you share my screen again, it basically puts us in a position to where, again, these aren't exact, but if you just draw from where we started back in November, a simple retracement, we're right back around the 480 area. That gives us right around this consolidation. If that doesn't hold, we don't even get to the 61.8% retracement before we come back here and hit the previous highs from 2023 or early 2023. Before that, basically 5 wave down that got reversed. Okay. So those are likely, those are possible if we break these lows we have right here, because again, everybody always talks about retesting the lows. Again, you got to retest them before you can break them. So let's not go ahead and go to break them. So the lows we have right here are first. The second ones are down here at this next retracement. That's what I was talking. This is a really shallow retracement so far. It's not surprising we would go further. And then the third comes down here, and we can still be in a major uptrend and go all the way down to 460 on the SPY. How many people would that freak out of the room?
And so, it'd be end of the world, Tommy. Like,
and that's my thing is, again,
the end of the world.
I'm not even saying as an advisor and me knowing this is coming that I'm going to react to every single bit of it. But it gives us at least kind of guardrails that I can kind of make sure where I add and subtract based on it. One thing I have been seeing over the last week is that when this correction, when the vertical part of this correction started a couple weeks ago, when we broke that little shelf right there, and basically utilities started outperforming, consumer staples started outperforming. They had been underperforming tremendously, and then they got beat up as soon as these markets started bouncing. That's what lets me know that the buyers are still somewhat there, just a day or two. I mean, they're still up near the highs on the XLU, but if you look at the actual equal weighted, they're not. They're way below the highs on my equal weighted. And so basically in that stance, it's a scenario to where, yeah, utilities are performing. What I want to see is do they perform in this moment right now? And if these markets do catch themselves before the end of the week and kind of head back up and say this bounce isn't done, if it's a big if, but if they do, I want to see if money comes out of utilities, because that is my sentiment, is where is this money flowing? It's flowing into consumer staples and utilities. Then yes, we have further down to go. It's just another piece of the evidence. And again, I believe in building market evidence, but I don't necessarily believe in just looking at sentiment numbers. I think you have to understand the sentiment of the market you're in. And that's why I paint the 1 foot out the door picture, because I believe that's more than just fear and greed number or more than just some calculable survey.
Tommy Lackey Jr., founding partner and CIO at Relativity Capital Advisors, joining us here on Pre-Market Prep, calm, cool, and collected analysis of the markets. Tommy, we always enjoy having you on, and we'll dial you up again real soon.
Thanks, guys. I'd love to come in, and please check out Power Investing. We're getting ready to launch it out for the public here very soon.
There you go.
Thanks,
All right.
Tommy.
Thank you, Tommy. We'll talk soon. It's always nice to have a guest like Tommy who is saying like, oh, we might see this pullback continue, but it's not the end of the world. I got to fix my Twitter feed because my Twitter feed's full of people that are either like, doom and gloom, the world is ending, or buy everything. It's never people that are smart like Tommy that actually, can.
Tommy's great. Yeah, he's a great
level
follow. He's
headed.
been coming. Well, how long we know Tommy? Joe got to be going on 10 years. He's been coming on the show. One of our first guests. Long time.
All right.
Yeah, Tommy's fantastic.
We've only got 10 minutes left, and we've got a lot to get to. Let's get to cannabis stocks. Yesterday, soared higher on the news of that cannabis would be rescheduled by the DEA from going to a Schedule 1 drug to a Schedule 3 drug. This was anticipated. It was in the works. Then there were some setbacks, and then it finally happened. My title for my newsletter yesterday was, "In a Sea of Red, Look for the Green." Because the cannabis is green too, and all the stocks
I see
were
what you
green.
did there.
Yeah, all the stocks were green too. But just looking at the MSOS, I mean, this thing closed up 25% yesterday. You had some of your big winners, your Tilray's, your Aurora, Canopy Growth. I think closed up like 65% or something crazy.
Huge moves.
But again, I mean, I think this was somewhat expected. I mean, like I said, there were some setbacks in the drug getting rescheduled. Like the Biden administration recommended it, and the DEA said, I don't know, it's still our call. The stock sold off, and then eventually they did it. And now you're seeing that. But today, it's looking like we might get a little bit of a pullback here. MSOS trading down now 3% this morning.
And that's natural profit taking coming in after a big move. Let's see if we can get some consolidation. Maybe they can move higher here. I've never been a big fan of investing in the pod stocks. You guys know this if you've listened to this show for a long time. They do get these lifts, though. And I mean, a lot of these things have been massively oversold. I mean, give a perspective, though, and just go out on that chart because everybody thinks how awesome. Like that bottom right chart on CGC. It's like, oh my gosh. It's just the biggest disaster of all disasters. I mean, Tilray's even worse. So, these stocks are having their day in the sun, and that day was yesterday, and maybe it continues for a couple of days. Sometimes these things go for a few days. Just long run, they just haven't been good investments. I mean, $300 a share back in 2018, it's $2. I mean, these stocks, a lot of them are down 99% from the highs. So the majority of investors who are invested in this pot stocks changing the world have lost a lot of money. People who have been investing in the last few weeks, though, have made a lot of money. So you can trade anything. I'd say these would be trades, not investments.
Do you think that this ruling is actually like going to change people's perspective of like, okay, I'm going to smoke pot now or not smoke pot?
People who smoke
no,
pot,
it's not. It's not that. It's there's tax. There's tax ramifications for this where a lot of the company, I forget what it is. There's like something 82 law that basically the way these companies were being taxed because it was a Schedule 1 drug made it so like none of these companies were profitable.
Tax implications?
Yeah, tax implications that now will basically allow these companies to hopefully make more money and maybe even be profitable. I still this is not my favorite space to invest in. I just think it's very crowded. I think it's a low barrier to, I mean, there's so many growers out there that in certain states now, they are basically like giving away the cannabis for free because there's so many growers rushed into Massachusetts once it became legal. And now they're like, well, we got to sell this whole pound of weed for, $5 or whatever it is, because there's so much, I mean, that's, over exaggeration, but there's just so much supply there. But either way, still a lot of ways to go. I think in this industry, I think it's just not very clear who the winners are going to be.
And I mean, Canada has, we legalized a long time ago, and it's so interesting. I mean, it's these gummies, they got these pot shops in every corner. It seems like every little town. Joel, it's like you drive through Ontario and you go through a town of like 2,000 people. The 2,000 people have a gas station and a pot shop. I'm like, how in the hell can this many pot shops? They're just everywhere. It's honestly unbelievable. There's so many pot shops everywhere in Ontario. I don't know how they all stay in business, but I guess
I think
a lot more people.
I think it's oversaturated, both on the
Oh my
supply
gosh,
side on the
supply.
ridiculous level.
Okay.
And the people were investing, you know, like, and the people were telling me back in 2018, 2019, you got to buy these Tilrays and CGC because this is going to expand and just going to blow up. And it's going to be awesome. And you know what they did? They had those years. And 2018 was an excellent year for pot stocks. And Tilray went from $30 to $300. But at the end of the day, it was just, you know, the valuations mattered, and the valuations just never made any sense on these things. Do they make sense? Maybe they come to a point where some of them do make sense now. Do your due diligence. It's not an industry I follow very closely anymore because too many people lost too much money in these stocks.
And I think the stuff they make now is too strong. I mean, you know, you try like one of the gummies and next thing you know, you're out for 2 days. It's like, that's not, you know.
Oh, is that going to be your excuse on Friday?
No.
I took the wrong milligram.
I took the 200 instead of that.
He's here now. This alarm, he's going to figure that out. We're good to go.
All right, well, let's keep things ticking though, because we have like a lot of stories to get to.
Let's go.
5 minutes. All right. Johnson & Johnson plans to settle its talcum powder lawsuit to pay $6.5 billion to settle thousands of lawsuits. The stock got a pop this morning on the news, and you know, still trading higher, about 3% again, while the rest of the market's kind of down today. So good news if you've been holding Johnson & Johnson. $6 billion tax settlement. And yeah, they're basically putting that out there, kind of throwing it, you know, not settled yet, but they're throwing it out there.
It's a path to settlement here is what they're showing us, a path to settlement.
Yep.
I've argued, and I argued this back when the stock was 175, and you go back to that show, that I think this is one of the best shorts in the market right now because the stock was making new all-time highs, and I'm like, this talc issue is going to hit them. And you know what? Over the last 2 years, it's been the talc issue that's just held them down. If they can solve this talc issue, I'll go the other side. If they can solve, there's probably 25 to 30 points of potential gains. It's not going to pop. They solve it, ain't going to pop 12, or it ain't going to pop 30 points in one day. It's Johnson & Johnson. But I think there's been 30 points worth of held down on this stock because of this issue. And, you know, maybe we're at a point at 144 or 145 where a lot of this bad news is priced in. And if they can settle this out, there was a Mizuho analyst on CNBC this morning. It's like, if they can settle this out under $7 billion, it would be a huge win for Johnson & Johnson. He was still skeptical. And, you know, I'm skeptical too until, you know, you actually see this thing settle because, you know, this is really weighed on the stock. So I'm not surprised it's up 4 points on this because, you know, this is a path to settlement here. And this has been a major issue for this company for a very long time now.
The lawyers are doing pretty good on this one because they tried to, float that other proposal and it got shot down. So they kind of just reworked things. They come with it. I'll look at the pre-market high of 149, up $4. See if you can get through that. Above that, short term, a pair of highs just over 150, 150.27 and 150.49. But be very good if it could hold the gains today. How they can, and I'm going to look at this PHG, and immediately when that news came out, and how the heck, Conan, Jilke, I can't pronounce that, and I don't know how they came up with PHG, but whatever. That thing popped. They popped that thing to $31. If you were chasing, you ain't happy now, drifting lower here. So I got to look at the important day for it. Is it going to pull a PHG or is it going to catch a strong 150 bid here in Johnson & Johnson?
Yeah, another company that has some, overhanging legal issues. 3M had a strong day yesterday, closing up nearly 5%, which is just a huge move for 3M after reporting earnings. EPS came in at $2.39, beat the $2.10 estimate. Sales came in at $8 billion, beat the $7.6 billion estimate. They also gave some more guidance based on their Solventum spinoff. Either way, just that stock getting bought up. And the same thing, I mean, once 3M really finally settles all these lawsuits, that could be a major catalyst for this thing.
It's held 3M down not 25 points. It's probably held 3M down 100 points.
100 points, yeah.
Because there's arguments, and there's still valid arguments, that 3M, it actually could bankrupt the company. It's that big, this thing. And this, if you look at 3M, why is it trading? Like people, give this, and they don't do their due diligence. If you look at 3M, just go to Benzinga Pro, bring in the PE, it's 11. Why is it trading 11 times only? I mean, it's so cheap. You know why? because this earplug issue is major. So they've got to figure that out as well. And there is arguments, if you're crunching numbers, that, it's big enough that it could even bankrupt the company. So they can find a path. I don't think it will, but if they can find the path to settlement here too, it's not a 20-point pop for it. It could even be more. So, I think it's been held down significantly in the last 3 to 4 years because of this issue here. And, the stock has got a 6% dividend, PE of 11. I'd love to see a settlement.
Dividend is great.
I may actually even buy the stock on the settlement. I might even
I'll go in with you. I'll go in with you.
If it chases.
I want the dividend. All right, real quick. We do have Powell at 2 p.m. We talked about it yesterday. The CME watch tool basically saying 99% chance. Wait, oh my God, this changed. Now it's saying there's a 1% chance for a hike. Yesterday we were saying, why is there was a percent chance for a...
So there's no chance of a cut, and somebody could, a 1%, who made a 1% chance of a hike? I'll sell that all day. I'll sell the hike. I'll make the one. I'll sell.
You will?
I'll sell you. I'll sell you the calls on the hike.
Either way, not a lot to talk about with that. We previewed it yesterday again, just because the expectation is that rates are going to stay the same, 99%, unless we get that 1% that there's a raise. Then, oh my God, then it could be watch out below. But real quick, couple more earnings that we did not get to from this morning. We had CVS, which has just been a dog of all dogs. We talked about how easy it is to order stuff off Amazon, which actually, like, toiletries and stuff, like when I need new deodorant, it's so easy to order, a 4-pack of, Right Guard or whatever that'll be at my door the next day off Amazon, that I don't go to drugstores anymore. But CVS reported EPS of $1.31, missed the $1.69 estimate. Sales came in at $88.4 billion, missed the $89.2 billion estimate. Guidance was to at least $10.5 billion for 2024 from $12 billion. So bad numbers across the board. Stock trading down 13.5% this morning.
I've hated these stocks forever. And, if you listen to the show, Johnson & Johnson, I got right. CVS, I've had right too. And you know what? It's popped up in 2021. I just don't understand how these are all different than Rite Aid. So we saw what happened to Rite Aid. I've argued for a while that I think WBA is the next Rite Aid, and I've been correct here as the stock just continues to make new lows. CVS is best to breed, but, I've been in those CVSs too. Obviously, people need drugs. They need, health insurance with the Aetna part of it all. I think CVS is a survivor. I'm not even sure that WBA is a survivor. I think CVS is, but I just don't jump in and say, "Oh, 4.5% dividend trading cheap." It's tough, man. This is a tough business here, and I think I just stay away just because the Rite Aid is just, what happened there, and then you got WBA is doing the same thing, and CVS has just been a disaster too. It's just been a place to lose money.
Step down seller. Step down seller, just looking for bids. Say, coming into the pit, bid, sold, offering it lower, bid, sold, offering it lower. They may walk it down to 56.19. That takes you all the way back to the low back in November of 20. November of 20, when the market turned on the Pfizer vaccine news. I believe that was November 7th of 20. And so that's your next level, 56.19 on the dailies here. You will get a pop today, but maybe it's one of those scenarios where they just keep slamming. You got to be some sell stops in the book here. All the way down, you slam those sell stops. You just get them at a level where the DMM wants to buy it, and you get a little pop here. But we'll be keeping an eye on 56.19 in CVS.
All right, real quick, we do have Starbucks as well, which reported yesterday after the close. Similar to
another one
CVS,
I hate.
Absolutely crushed. Starbucks reported EPS of 68 cents, missed the 79-cent estimate. Sales came in at 8.6 billion, missed the 9.1 billion, so missed the sales by like 500 million there. Pretty big deal for Starbucks. The guidance was a little weak, so stock trading down now 12%. I didn't listen to the call, so I don't know if they talked about the boycotts that were facing Starbucks, but I had been saying for 3 months that, look, this is a bigger deal than what people were talking about, because you went on TikTok, you went on Twitter. I saw thousands of people posting about it. And
why were the boycotts? Why were people boycotting it?
It was because people were saying that Starbucks was supporting Israel or something, when there was never really anything there. I don't know. It was the
political.
Political. Yeah, political. But either way, I remember when I was looking at all this stuff on Twitter and whatever, going on like Bloomberg, going on CNBC, and no one was writing about it, which that's kind of Chris Camillo's whole thing is he's like, once Wall Street knows about it, your, trade is done. So I didn't, I made a good call. I didn't really make money off of it though. But again, I would venture to say at least part of Starbucks weak quarter was from these boycotts that were hitting the company.
75-73.
I think people are going to boycott it. And I just think when you're a little bit tough and, we know half the U.S. population is struggling. I mean, $5-6 coffees. It's the thing. I just never really got it. And again, I've been wrong on that because obviously Starbucks has figured it out. But are they even, what's cost for coffee at Starbucks now? Like, I don't know.
It's like $3.50 or something for a black coffee.
$3.50, $4. It's twice as much as everywhere else.
But what may have happened is people that used to go to Starbucks like daily or 3 times a week, then they were like started boycotting it, and they were like, "Oh, I don't need this anymore. I'm making coffee at home, and it's just as good, and I'm saving money."
Costco coffee. Dennis, you don't even drink coffee, so
no, I don't.
Let alone
I'm too hyper already. I need I can't take. I need just. I need depressants. I think because it's keep calming me down. I'm too hyper already. Me on coffee? I'd be like talking 1,000 men. You wouldn't even know what I'm saying.
You need to do, what do they call it? The red eye. When you go to Starbucks, you ask for 2 or 3 shots of espresso. It's like $2 or $3. And then you say, "Oh, could you put a little bit of coffee in there?" And then they don't charge you for the coffee.
Always finds
so
the
there
way.
you go. So to me, it's still got to get the edge. Okay, we're going overtime here at 9:07. Holy mackerel. Dennis, Fed Day, Amazon, your strong stock today.
Chop. That's what's going to happen, I believe, today. Chop. How do you make money in choppy markets? You fade it all. Fading it all.
I'm like Tommy Lackey. I'm waiting for, see what happens with this pullback if it continues, but I'm going to be patiently buying as
long term, patiently buy. You're young, use devs, buy good companies at reasonable valuation.
It's mandatory.
Good companies, reasonable valuation.
Tina. All right. Well, we're going to go ahead and wrap. We went over today. Joel, who do we got coming on with us tomorrow?
Oh, tomorrow is going to be a mystery guest.
Ooh, special. You gotta tune in to find out who's joining us tomorrow, 8 a.m. Eastern. We will be there. Have fun today, guys. Try to stay in the green. There should be some fireworks maybe at 2 p.m., maybe at 2:30 when Powell takes the podium for the press conference. Please smash the like if you haven't already. We got live trading starting right now.